Everybody, happy Wednesday. Just want to thank you for logging into my very first video in real estate over a coffee break. If you know me, you know my complete obsession with coffee. So why not combine my two very loves of coffee and real estate and make it a show, right? So for my very first video, I decided to concentrate on the number one topic that everybody always asks me about, and that's finance. Finance, finance, finance. You got to remember to not be afraid of your finances. You have to know your credit score. You have to know where you stand because it's purchasing power. So when the very first step when applying for a loan or trying to get a home is to get pre-approved. Got pre-approved. If you don't got pre-approved, my car don't run. We're not going to go see any houses. But, you know, getting pre-approval is not a hard step. It's just a couple of things that we will need to submit in order to see where you stand when it comes to how much you could afford, how much you want to be able to pay a month. Also, if there's anything that you'll need to work on before being approved. Now, some of the things that we will need will be the last 2 months of your pay stubs. We'll need the last 2 months of your bank statements, as well as last 2 years of your tax returns and your last 2 years of your W-2s. There are a couple other little things, but those will be the main things that we need. So for the very first one we're going to go over, it will be the conventional loan, and typically you need a 620. Sometimes 720, 730 is what they're looking for, but below that, what that will be affecting is your interest rate. And for that, you need there's different percentages for a down payment. It could go as low as a 3.5 and as high as a 20, but that really depends on your credit score. Again, don't be afraid of your finances. Your finances is your purchasing power. If you know your credit score, you know the debt that you have, it will really affect on how much you're paying monthly when it comes to interest rate, when it comes to what you're paying on a mortgage, and the less you put down is also the least amount, the more that you'll be having to pay on insurance premiums. Not premiums, but insurance, mortgage insurance. So basically, for conventional, you need a 620 credit score and around 3.5 to 5 to 10 to 15 to 20% down. Then when you get into the FHA program, you need a 600 credit score. We also have credit scores that you accepted at a 580. And I've seen some people do it a little bit lower to 560, 550. But of course, that definitely affects your interest rate, like I mentioned before. And it also depends on how much you're putting down and how much the house costs. So it's not that we don't do financing for certain credit scores. We definitely do. There are definitely options. It just will definitely affect how much you're paying per month. So just keep that in mind. It's not to discourage. It's just to keep it real with you. There's also, for my veterans, the VA loan, which you do not need any down payment, which is great. It's a great advantage that they have. Credit scores around 580, 600 as well. Oh, I almost forgot. If you need help with your down payment, there are definitely some down payment assistance programs. There are definitely some criteria. Different lenders have different criteria, but speak with me and we could try to sort those out and figure out if you qualify for the down payment assistance. Who does not want some help with the down payment?